It's raining and it's cold. Because I am a good friend, I am going to be teaching my friend how to trade Forex today. No one should be up this early. But guess who is up? Me, Toria. And here I am always talking about how to become the fit trader. So if that's your vibe, grab a pen and paper. Let's get into today's video.
Give me a pen and paper. Give me a pen and paper now.
Let's get to know our onions. So the first ingredient for you to properly trade Forex is, first of all, let's get to know what this is all about, because you cannot even start talking about something you don't know, right? What is Forex trading? This is what I'm going to tell my 4-year-old brother. You see, Forex, it is the financial market, and in this market, currencies are being bought and sold in pairs. So now, here's the gist.
Sound like you really got the gist of the game.
About the whole breakdown of this thing. Let's say I want to go to Panama.
Where are we going? Panama.
And as a Nigerian, what I have is Naira, right? So I'll go there and say, okay, well, you guys should give me dollar because I'm going to this country and what they use there is dollar. So I'm going to exchange my Naira with the dollar, right? Now, after my stay, my business meeting, my trip, whatever it is I went there to do, and then I want to go back to my country, I would need Naira, right? So I'll go back there and say, okay, well, I'm done. No. These are not the exact words I would say, but you get the gist. I'll tell them, okay, well, I'm done. No. So I need my Naira back. I want to go back to my country.
You have to know that I'm going back to my country roots, because I'm so country.
But here's what happened. While I was away, the exchange rate of the dollar had increased. So instead of them to give me my 1.5, which was the initial money I exchanged for the dollar, they will now give me 1.6. You see, I have made extra 100 Naira from just the difference in the exchange rate.
Easy money.
So we can just see that how you make money in Forex is the difference in the exchange rate during a particular period of time. Finish. The second ingredient is we need to know our tools. Of course, you need to know your working tools, right? In this video, I talked about how Forex is not where you go to hope and pray so that price goes in your favor or in your direction. Forex is about carefully done speculation. So I recommend you checking out that video so that you know what to avoid as a trader. Before you do that, please drop a like and comment so that YouTube can push this out to other people so that they get to see this and they don't miss out. All right. So the first thing anybody who comes across Forex trading gets to see, that thing that makes them say, oh, I want to learn Forex, is the chart. It's a visual representation of what price has done. In fact, I don't like to make things complicated because when I started learning how to trade Forex, I hated it when I saw traders using big English for something. So I just break it down, just keep it simple for me so I know what I'm doing. I'm already stressing my brain on how to tackle this market. Stop making me to also go to the dictionary. When you open that app that you use to trade Forex, which we'll talk about in another video, you will see something moving, something like you see candlesticks, you see, oh, 1 month ago price was bullish, 1 month ago price was bearish. So that thing that enables you see that, okay, this is what price has done over a period of time. That is what we call the charts. And in the charts, we have several types of charts, which is, there is the line charts, there is the candlesticks. See, let me keep it at that because that is only what you need in 2025. So the line chart, that's what they were using back then, and it's funny because how are you guys able to? But anyway, things have evolved. So a line chart is a graphic representation of what price has done. But what I'm going to talk about today is the candlesticks because that is really what is important. The line chart was used back then, and right now it's candlesticks. So that's the one I need you to know about. So the candlesticks is showing you that this was where price opened though, this was where price closed though. It has more details than the line chart. When you open your chart and you see these candlesticks, you will now look at, 1 minute ago, 5 minutes ago, the bulls had more strength. Also, 1 hour ago, the bears had more strength. And now, we have two candles representing this information. One, mostly on your chart, what you see is the green candle and the red candle, with the red candle representing sells, which is the bears, and the green candle representing the bulls, which is buys. And most times, you see that these candlesticks have a wick and then a body. This will just show you that, when the bulls were in the market, they were so strong because sometimes you see a candlestick is just going like that. So now you see that, That means at this period, the bulls were in the market, they were strong. So you use this information to do your analysis and arrive at a speculation, because in the market, it's always going to be a game of probability. So the next thing is time frames.
Just trying to remember, we're working in a time frame here.
All these things is just linking to one thing. They still show you how prices have moved. Okay, in the past 1 hour, price showed that there were more sellers in the market. In the past 1 month, price has shown that there were more sellers in the market. I have more sellers. So any decision I'm making, I have to know that, okay, for this past 1 month, there has been sellers. So whatever you're doing, be guided. The third thing you need to know is the market condition. Of course, you need to know whether the market is trending, whether it is ranging, whether it is choppy. Let me give you a quick breakdown of this. When the market is trending, you will see that it's either in a bullish trend or in a bearish trend. That is, for bullish trend, market is making higher highs, higher lows, higher highs and higher lows. And then for the bearish trend, it is making lower highs and lower lows, lower highs and lower lows. If you're a trader, you know that, the trend is your friend. So when the trend is bullish, you know that you are looking for buys. And when the trend is bearish, you know that you're looking for sells. And then when the market is ranging, that is, it is going sideways, you also know what to do. This is really tricky because at some point, you don't know when the market is going to break out and go in another direction, especially if you're just starting out. But don't worry, I'm going to be here to hold you by the hand, all right?
What's next?
The fundamental thing about me is that I must always have something to eat before I go to anywhere. That is why I'm having this for breakfast before I go to the gym. So you better know that I'm going to take my fundamental analysis extremely important, which leads us to our third ingredient, which is types of analysis. There are 3, but the one I want you to pay much more attention to is all of them.
Pay attention to all of them.
And what simply happens in fundamentals, I don't like complicating things, so I'm going to just give you simple as they are. You are using the economic calendar, you're using economic news to trade. Sometimes these news are not economic news, but they're going to affect the currency of that particular country.
The council is worried about the economy heating up.
It is not only economic news, but whatever news that is going to affect the currency, we pay attention to. So they are fundamentals. Back in the day, people were only using fundamental analysis to make their decisions in trading and make profit. But these days, most people use the third analysis I'm going to talk about. Moving to sentimentals, you already know what sentimental is.
I have a sentimental weakness for my children, and I've spoiled them, as you can see.
This is when people trade based off of fear or greed. Most times when a particular event is coming up, when things are surrounding a particular period, people tend to make decisions based on that. I'm going to give you a clear example. Let's look at these 2 events. So when the current president of the United States was elected, people had this thought that, this is a man for the crypto community.
We all laughed, but then the Crypto Kids app paid for this building.
He has already made statements in the past showing that, perhaps he's going to accept this crypto community. So when he got the people are like, all right, things are going to be bullish from here. Things are going to skyrocket from. So when some people are trading, they're like, we have confidence in this man. He's going to make things go well. So what happened there was trading with sentimental analysis. Even during the Bitcoin halving, people were having thoughts about it, right? So when they made their decisions off that, they were trading based off sentimental analysis. And of course, the popular kid in town, technical analysis. In this type of analysis, traders look at history.
Yes, indeed it has, and I do appreciate that trip down memory lane.
They look at what price has done in the past, and then they now say, okay, if price did this in the past, that means at this particular point when it's still showing the similar pattern, it is likely to do this. That's where you now see your chart patterns, candlestick patterns. Then you now use trend lines because you know that, when the trend was down, people were selling. Of course, obviously, that is the type of analysis we have in Forex trading. And of course, the one people don't talk about, the hope analysis.
And no matter how much you wait and hope and wait more, you don't get what you want.
So here, they just stay and pray, since I'm in a sell, price should sell. Or since I'm in a buy position, price should buy. That is what they do in that strategy. I don't know who uses it, but I know a lot of you are doing that. Okay, we have to switch to a different strategy in this video because I'm about to go to the gym and I want this to be a win-win situation for both of us. So can we meet to the gym while I tell you about our fourth ingredient? Oh yes, your strategy. This is the part where we talk about how you make money from Forex. I hate it when people don't stick to one strategy, just like the way I hate it when I see people come to the gym without even warming up. You just go and start lifting. Who the hell do you think you are? Are you trying to get yourself injured? Are you trying to lose all the money you came to this market with? I don't think so. Yeah, that's the first one. So how do you analyze the market? Do you use price action, or is this smart money concept you're using? It could even be that you use fundamentals to get your analysis and have an idea of what you think the market is saying. The second one is, what time frame are you using? Are you using the 1 hour? Are you using the 30 minutes? Which one suits your trading style? Thirdly, your entry and your exit. What do you need to see in the market before you enter? And what do you start seeing in the market that gives you the signal that, oh boy, we need to leave? And then we close our positions and leave the market. I've talked about this in almost all my trading videos. The fourth thing is, you need to know that risk management is key. How do you manage your trades? What is your stop loss? What is your risk to reward ratio? Which lot size do you use? And all of this matters. And the last point for these ingredients, which is your trading style. What is your trading style? Are you a scalper? Are you a day trader? Or do you hold positions for long? Are you a swing trader, or you're a position trader? This matters in your strategy. So ask yourself all these questions and answer it. I'll end this by saying no strategy is a holy grail. And I want to thank my amazing subscribers. You guys are the best. Thank you for commenting, liking. Just in case you're not part of them, please subscribe so that you can join the amazing family. Uh-oh, my battery is low, so I gotta go. I should have a record label soon, because what is it with these lines? Oh, what a workout. Thank God that phase is over. Well, I have to complete this video before I go to run my errands. Now, after you found your strategy, right, you need to find a way to curtail your loss. Two easy ways you can manage your risk as a beginner. There is break even, there is stop loss. Also, there is closing out on some positions. Where are you? Oh, Chima, what the fuck? Yeah, but as a beginner, I'll just tell you to stick with this two I first mentioned. That is, break even is when you have a running trade. Once you are on that winning trade, you'll bring your stop loss below your entry or above your entry, depending on if you are selling or buying. So now, you can comfortably let that trade run to take profit, or you can even let it run till the trend stops without being scared that, oh, you closed out too early or you missed out on this massive trade. On the other side, if price decides to go back to your entry, you're going to be rest assured that your equity is safe. The other thing is that you might not get all the pips that you were expecting from that movement, but then your capital is safe.
I think, gentlemen, you will agree your investment is safe. Yeah.
And of course, the second one, which is stop loss. When you set a stop loss, you're simply telling price or the market that if price doesn't go in my direction and then it starts going in the opposite direction, when it gets to this level, close me out. Because you are busy with life, you don't really have that time to always stay on your charts. That is why you always set stop loss and take profits, which is vice versa of stop loss. What I want you to do is comment on this video, like this video, so that YouTube can push it to other traders who are also looking for ways to properly trade Forex. And then if you subscribe, it will also give me the motivation to make more videos. With that, with love, Doria. No, that's not it. Bye bye. See you in the next video.